ERM is a cultural and sensitivity process towards identifying, managing, and synthesizing cross-bank risk management. It should be strategic, which is top-down, and not audit, which is bottom-up. It should be the arbiter of risk and not the owner of risk. And the best metaphor I have for that point is like an orchestra leader who knows how to play a good melody, but also is sensitive to who's playing out of tune. The benefits of using ERM is that it complements strategic planning. It also standardizes the metrics by which idiosyncratic risks that rest in the various bank silos are measured. As important, I think, though, in the post-financial crisis era, when forward-looking and probative risk management techniques are the norm, it imbues both the board and management with a sense of it being in control of its own destiny. And frankly, it makes good business sense. You start with an ERM program by being aware of the complexity or non-complexity of your financial institutions and therefore seeking the tools or vendors appropriate for that complexity. If you need a Ford, don't buy a Cadillac, as they say. Also quite important, I think, is to understand that ERM does not have to be, unlike financial reporting, exactly precise. It just needs to be directionally accurate. And I think it's important, again, to get top-of-the-house buy-in to make sure it's tied to the strategic planning process. Some of the challenges to overcome for ERM are to avoid tech-savvy vendors with limited domain experience. Also, to be sensitive to any vendor, accounting firm or whatever, that begins this process with kind of a Sarbanes-like bottom-up approach, approaching your staff with 1,000 questions and effectively buckling the program before it ever gets to fruition. Also be sensitive to inter-silo turf battles that will be in place in the bank inherently. And finally, ensure that it is not perceived internally as merely an audit or regulatory response. It is the culture. It has to be seen as the culture to be effective. And therein lies one of the possible wins for community banks in ERM, and that is because it's not heavily prescribed as it is in some of the larger banks. It is in, as they say, in the eye of the beholder. So if it is rational, defendable, bought into, there's a darn good chance that it can be a success at your community bank.